still think, Frank, you want to be in technology, mega cap technology, in particular, the mega cap technology names that are buying back their stock. And this is an incredibly important point, because if you look at the performance year to date for Amazon, for Tesla, and for Netflix, they're underperforming Alphabet, Microsoft, Apple, Facebook. What's the difference? The common denominator for the mega cap technology stocks that are outperforming is that they're buying back a significant amount of shares, 30 billion up to 90 billion for Apple. So I believe in Apple, I believe in Microsoft, I believe in Alphabet. Beyond that, within technology, there are a lot of quality names. Most of those names are represented in semiconductors. The area that I would be concerned is if we are going to see a rise in yields, then you will see longer duration assets pause the appreciation that they've experienced, and they'll do that in particular for a lot of the high premium valuation names.
Weiss, over to you. I always know you to be just too cool for school, but I hear you're pretty emotional about the market today.
Emotional? I don't know. I mean, this is about as emotional as I get. I mean, I sort of do get, wiped up.
Weiss, we're having a little technical problems with your shot. Jim, let's go over to you. Farmer Jim, what are you thinking right now? We're seeing maybe even a possible change in leadership when it comes to tech.
Well, I think that Weiss is emotional. I think he's all broken up because he and I haven't been on the show in a while. I understand, Steve. Just, get a hold of yourself and we'll come right back to you. No, but to the question at hand, I thought Joe did a very good synopsis of technology. I'm going to draw a slightly different conclusion, which is this. Let's take Apple as an example. The stock over the last 5 years has returned 43% per annum. That is simply a rate of growth that cannot continue over the coming 5 years. Now, I say that definitively. Maybe I'll be wrong, but I'm pretty sure it's not going to return 43% per annum for the next 5 years. It's still going to be a positive returner. I hold it in my portfolio. I hold it happily. The point I'm driving at is that leadership is highly likely to change. I think we're seeing it right now as fears about the Delta variant start to ease. You're seeing financials take hold. You're seeing energy take hold. You're seeing gaming stocks take hold. Airlines, all of the reopening trade is starting to take hold. Price matters when you look forward. The prices to which the technology stocks have risen make it hard for them to be the leaders going forward, but they're still going to be positive. I think these reopening trades, like financials, like airlines, with where their prices are now, they're likely to be the leaders when we look back 1 year from now.
So, Tiffany, I see you have Microsoft and Apple in your portfolio. Surprised at all about this bit of a leadership change, at least this week?
No, I'm not surprised at all. Going forward, we're kind of in this, we've kind of come through this recovery, and going forward, I expect there to be leadership changes. We've seen it all year. And so Jim is absolutely right. I mean, we are seeing rotational leadership. And so when I kind of look back in terms of like what's going on in the market right now, what went on last week, what's going on this week, investors should be looking for opportunities to buy, not places to hide. Right. And so looking at the Fed minutes release last week, we haven't had anything close to a correction all this year. Right. So what we have had is 11 days of 1% declines. We've had 2 pullbacks of 4% declines, and every single instance, stocks bounce back. As a matter of fact, in every single instance, stocks hit all-time highs, come back within an average of 2 weeks. So these bounces are going to continue to happen. So when you look at all the names that were down on last Thursday, last Friday, they're back up right now, starting on Monday. So again, there are all these opportunities. You can look at things like Mercado Libre, 3.5% down last week, back up this week. Lulu down, back up this week. Disney, Ulta, JP, all of these names, RH. And so investors really should be looking for opportunities to buy the things that they already like, to add to positions when these dips happen. They're happening often, and they're very, very quick. So you don't have 5 and 6 and 7 days to think about it. Investors need to be taking advantage of those opportunities.